How is everybody doing today? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to cover a very interesting report from the U.S. Treasury. Actually, it's from the Office of the Inspector General, which is part of the U.S. Treasury. But this is on a very small bank that recently failed. This was called the First National Bank of Lindsay. And we're going to take a look at this. It's actually a very short report from the Treasury, but this is the actual report here. And I'm going to blow this up a little bit so that everybody can hopefully see this. So this is financial regulation and oversight and fiscal service, safety and soundness, failed bank limited review, First National Bank of Lindsay, issued March 27th, 2025, from the Office of the Inspector General, which is part of the Department of the Treasury. And we're going to scroll down here. Memorandum for Rodney Hood, acting controller. So this basically says this memorandum represents the results of our review of the failure of First National Bank of Lindsay, the bank, which operated one office in Lindsay, Oklahoma. The bank was an insured national bank without trust powers chartered on March 23rd, 1902. It was wholly owned by the First Lindsay Corporation, a closely held bank holding company. As of June 30th, 2024, the bank reported total assets of $108 million. On October 18th, 2024, the Office of the Comptroller of the Currency, the OCC, closed the bank and appointed the FDIC as receiver. As of October 31st, 2024, FDIC estimated the loss to the Federal Deposit Insurance Fund to be $42.3 million. Because the loss to the Deposit Insurance Fund is less than $50 million, as set forth by Section 38K of the Federal Deposit Insurance Act, we limited our review of the bank's failure to 1, ascertaining the grounds identified by OCC for appointing FDIC as a receiver, and 2, determining whether any unusual circumstances exist that might warrant a more in-depth review of the loss. In performing our review, we, number 1, examined documentation related to the appointment of the FDIC as receiver, and number 2, reviewed OCC reports of examination for the 5-year period before the bank's failure, and 3, interviewed OCC examination personnel. We performed our field work from January 25 through February of 2025. So, we also reviewed the Government Accountability Office standard for internal control and the federal government to identify the components and principles of internal control that are significant to our audit objectives. We determined the control environment and control activities as the internal control components that are significant to our audit objectives. Let's continue. So we conducted this performance audit in accordance with generally accepted governing audited standards. Those standards require that we plan and perform the audit to obtain sufficient, appropriate evidence to provide a reasonable basis for our findings and conclusions based on our audit objectives. We believe that the evidence obtained provides a reasonable basis for our findings and conclusions based on our audit objectives. Cause of First Bank of Lindsay's failure. So the OCC appointed FDIC as receiver based on the following grounds. Number 1, the bank experienced substantial dissipation of assets or earnings due to unsafe or unsound practices. Number 2, the bank was in an unsafe or unsound condition to transact business. And number 3, the bank's unsafe or unsound practices or conditions were likely to cause insolvency or substantial dissipation of assets or earnings. And number 4, the bank's unsafe or unsound practices or conditions were likely to weaken the bank's condition. And 5, the bank's assets were less than the bank's obligations to its creditors and others, including members of the bank. The primary cause of the bank's failure was a critical breakdown in the bank's internal controls, which allowed fraudulent activity to occur that affected a substantial portion of the bank's loan portfolio and liquid assets. Deficiencies in the bank's board oversight and internal controls and other unsafe or unsound practices allowed one or more bank employees to alter bank records and hide weaknesses in the bank's loan portfolio from examiners. As a result of the identification of discrepancies in its books and records, the bank had to recognize losses that exceeded the bank's capital, rendering the bank insolvent. So here we had a bank employee that basically altered bank records and hid weaknesses in the bank's loan portfolio from examiners. So basically, doing some fraudulent stuff, maybe, I don't know, maybe speculating a little bit here, but maybe tried to just hide some bad loans, or maybe the fraud was a little deeper. Maybe you had, different things going on there with the loan officers. I don't know. But let's see what it says here for the conclusion. So the conclusion. So we determined that an in-depth review of the bank's failure is warranted, given that the fraud was a significant contributing factor to the bank's failure and the extraordinarily high estimated loss rate to assets, 54%. Performing an in-depth review will provide an opportunity to further evaluate the cause of failure and the OCC's supervision of the bank to determine whether there are any lessons to be learned from this failure. The planned scope of our in-depth review will include, but not be limited to, the current supervisory guidance to banks and examiners on fraud indicators observed during examinations that occurred at the bank, particularly in the evaluation areas of asset quality, loan portfolio, and management. We anticipate completing the in-depth review by no later than December of 2025. So we provided a draft of this memorandum to the OCC for comment. And basically that's it. So they're basically going to get more in depth on this and find out exactly what happened with this fraud from this employee. But sounds very interesting. But like I said, just something I saw the other day, and I again just wanted to report on it, just let you know what was going on. This was again very small bank here in. Did we say this was in Oklahoma? Yes, very small bank in Oklahoma that failed, only 108 million in assets, but the fraud was big enough that it rendered a total loss of about 42.3 million. So, and this bank failure again coming at the end of 2024. I did report on the first bank that failed so far this year. Again, just another small, tiny bank. I mean, nothing of any big consequence. But like I said, whenever there is fraud involved or shenanigans, I like to report on it because I think there are always lessons to be learned from these things. What was the bank? Yeah, there's so many questions. What was the bank board doing? What did the bank board know? What was senior management doing? What does senior management know? What was going on with the internal controls and procedures? Did they have a chief lending officer? Did they have a chief credit officer? Like, who was looking at this stuff? And then what exactly was the fraud that was perpetrated by, was this perpetrated by a lending officer? And if it was, what did they do? How did they do it? I mean, over the years, we've seen some pretty wild things done by bank lending officers that led to failures or major troubles at different banks around the country. So a lot of interesting stories in that regard. But anyway, so I will wrap this up by basically saying when this full report comes out later this year, they did say that they would have the full investigation by December. So whatever that comes out, I will obviously cover it and report on it to continue the story. But to wrap this episode up, I would just say if you please like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. And I will be back to everybody again real soon. Thanks.